Hey, folks, welcome to InTheMoneyStocks.com's intraday analysis video, brought to you by the creators of proprietary price, pattern, and time methodology. Learn the PPT strategies and profit for life. My name is Gareth Soloway, Chief Market Strategist here at InTheMoneyStocks.com. All right, a lot to go over. Take a look at the markets as we're making new lows of the day. We're not down tremendously, but the S&P is down 6.5 points, Dow down 60, NASDAQ down 9 on this Wednesday, November 20th. Now, the key is we just got the FOMC minutes. The markets were trending sideways into that on very light volume. Now, the key here was that the FOMC talked about changing rate policy in their October meeting, talked about toning it down. So just the fact that they were talking about it does put a little bit of fear in this market, although, again, we're not seeing a major sell because, honestly, I don't think many people believe the Fed. I mean, we've heard they're going to take down QE, they're going to, revise it a little bit down, they're going to leave it up, they're going to maybe scale up. It just goes back and forth, folks. And yes, you don't necessarily want to hear that they're going to be taking it away if you're a bull on Wall Street, but at the same time, yeah, okay, it causes a little bit of selling, and that's about it. I mean, that's the way I look at it. All right, unless we break this key level, which I'm going to show you next. All right, guys? So this is what you're looking at. So far, you're below this pivot low from yesterday. So 3 days in a row, we've made lower lows. All right, 3 days in a row, lower lows, which is obviously a small bearish sign. But the key here is to look at this level. All right, this level I showed you yesterday, it's the 177.50 level. It was the previous breakout level. If by chance in the next couple days or today, we sell all the way down to 177.50, which is $1 lower than the Spiders are right now. If you sell off all the way down there and you take that out on a closing basis, it changes the whole game plan to a negative market. All right, so right now, yeah, I mean, overall the markets are overbought. Everything's working out perfectly like I laid it out, saying that the markets could go up 1 to 3% following this breakout right here. That's exactly what we did, and they wouldn't go up further. A lot of people didn't believe me, but again, the PPT methodology shows through and shows how amazing it is. And sure enough, we've rolled over here. Now, the big question again is, do we come down and test this? And if we test it, do we break it? You break it to the downside, I'm telling you right now, there is a substantial amount of downside to go after that. If they hold it, then you could go back to the highs. So at this stage of the game, if you're a swing trade investor, if you're someone who's looking at the overall market over the next couple weeks, you are following this trend line like a hawk, 177.50. And remember, at the end of the day, it needs to be below that, not just intraday. All right, so that's what's going on here, folks. You can see a little bit of a tail forming, possible bottoming tail, although we have a lot of time left in the charts. We're seeing stocks across the board get very, very weak. Goldman's down $1, JPM down 16 cents, Amazon's down about $3, Apple's down about 3.5, Google's down $1.75, Baidu's down 3 on the day. So we're seeing a fair amount of weakness. A couple things I want to point out in terms of interesting stocks. Number one, the GLD. GLDs, take a look at this, getting hammered. GLD is getting annihilated. Look at that. All right, if we go to the daily chart, I predicted this because we were below this trend line. All right, how many times have I showed you guys this trend line and talked about when we break it, we've been below it, and look at the collapse down we're seeing. All right, I've been bearish on gold. I say it's going back to double bottom here, right around the 1,200 level on the spot gold price, and then I even think it could go lower. Okay? So obviously, if the Fed is talking about not printing as much money, then that would be very bearish for gold, and sure enough, you're seeing that. All right, the other thing I want to point out, guys, and first of all, let's just take a quick look at the dollar. The dollar's having a big spike up here. I also told our members in yesterday's technical daily analysis video to go long the dollar if they were in the Forex market. All right, hopefully they listened, because you would have made a ton of money today on this big, big pop. But bottom line is this. The ECB today, and this is another very concerning thing, the ECB this morning came out and said they were talking about going and having negative interest rates. All right, the Fed has done basically zero interest rates. That's why when you put your money in the bank, you don't make anything on it. All right, the scary thing about negative interest rates is that it's actually taxing. It's a tax or a fee on anyone that has any money in a bank account. Well, that's negative right there. But you have to look at the underlying signals. What is that telling you? And what that's telling me is if the ECB is talking about doing that, to go to that extent to stimulate the economy where they're actually penalizing people for keeping money in the bank, therefore forcing them to spend it, if they're going to that extent, then things in Europe must be a lot worse, in my opinion, than we've been led to believe over the last year. If you notice over the last year, we really haven't had any major crises in Italy, Spain, Portugal, all those countries, Greece. It's kind of quieted down. But if they're talking to this extent, things are not good over there. I mean, it's a very simple thought process. X plus Y equals Z, whatever you want to call it. 1 plus 1 equals 2. All right, so that's the other little tidbit I wanted to mention to you guys today. Let's go back to the spiders. Spiders have had a little bit of a bounce here, so a good little bounce. Still a potential bottoming tail here. We'll see if we recapture this white trend line. We closed below. Obviously, for those of you that follow the confirmation signal, we never confirmed, and that's what we're looking at right here, although we still have 2 minutes left in this candle to see if there is confirmation. All right. Couple other stocks to note here. Priceline. Priceline's having a good day today, up about $30. It's off its highs. But the key here on Priceline is that Goldman upgraded it today. Now, many people think that's a bullish sign. Honestly, it's a dead-on sell signal. All right, Goldman has a reputation for upgrading major things at highs, and then they never go higher than that. Good example would be 2008. In 2008, oil was at $148 a barrel. Goldman Sachs came out and upgraded it. They upgraded their price target. The oil obviously fell to $30 a barrel following that. All right, these are the things you need to pay attention to. All right, I could go to countless other things. Think about Apple. Apple upgraded at $700 a share. Look at where it is now. All right, and all these companies were upgrading these stocks at $700 per share. All right, very important to not get on the wrong side. Honestly, Goldman is one of the best contrarian indicators only when they upgrade their price targets at all-time highs. And right here on Priceline, take a look at the daily chart. I mean, this might even be a topping tail today, depending on where we close. But I mean, look at Priceline this year alone. Priceline this year alone is basically up almost 100%. Right, so you're telling me now you're gonna, honestly, could it in 2 years could it go up to 1,500, which was their price target? Sure, in 2 years, 3 years, but I just think it's very silly of them to do it now instead of waiting for a pullback because I think it just looks bad. Maybe that's their point. Honestly, maybe they wanted buyers so they could sell their position into it. I think that's a lot of what Wall Street does. Is Wall Street talks about, oh, be bullish on the markets. A lot of these hedge fund managers coming out and saying, oh, I'm in FedEx or I'm in this or that at all-time highs. And then, obviously, amateur retail investors jump in and follow them, pushing it up, and then they sell right into it. I mean, it's the scam 101 you got to be aware of. And that's why we teach here at InTheMoneyStocks.com just a pure way to view the markets. Don't view it through the hype. View it for what it is. Follow the charts, read the charts, learn how to read these charts, which we will teach you, obviously, and you'll be fine. You'll never get in on the wrong side, and you'll just never chase, which is the great thing about it. And does it mean you sometimes miss on some of the upside if you don't chase? Sure, it does. But I'd much rather miss on a little upside than get clobbered on some of these tops, like on Apple at 700. I mean, just think about those people that bought at 700 and had to ride it down to 400, even the high threes. So again, just keep an eye on this stuff. I mean, this is what it's all about, guys. This is what it's all about. Spiders remain down 35 cents. Looks like we did get a bottoming tail, and they closed it above the low from yesterday, which is actually really fascinating to me. So again, does put a possible floor in this market in the short term. Good little dump on the Fed minutes. But again, as I said, the Fed is talking out of both sides of the mouth so often. And in fact, last night, Ben Bernanke gave a speech, and he basically said, oh, we're going to continue to print. Yet the Fed minutes say differently. So, I mean, what they're really doing is just talking out of both sides of their mouth. So I don't really think the market, yes, it's causing a little selling, but we're only down 35 cents on the spiders. I mean, it's nothing. And I think that's the problem. I mean, that's the problem is that no one really trusts what the Fed says anymore. And I don't blame them. So, in any case, bottom line is the beauty of what we do here at InTheMoneyStocks.com, we just follow the levels. So, honestly, just remember this level, 177.50. Do we close below it? Do we not close below it? If you're above it, I would be in more of a neutral stance. I don't think it's feasible to be bullish when the markets are so extended on the daily chart, but I think you could be neutral on the overall markets. And then if you take out 177.50, then you're looking at a 5-10% potential correction, maybe even more. So just watch this 177.50 level like a hawk, guys. That's all I want to convey to you right now. All right, I got to go back to trading, guys. Get back to stuff here with our members. Take the 7-day free trial to InTheMoneyStocks.com. The research centers, the 7-day free trial geared toward investors and swing traders, while the day trading, intraday stock chat, obviously, for day traders. Take care, guys. Have a great afternoon.